Right, so this is going to be a stock talk for the 14th, right? This is going to be a continuation of what I've been discussing the past few weeks and how everything's kind of coming into fruition, although not perfectly, but more or less kind of exactly the timing and window that I've initially thought as far as after the 10% decline that we saw into March, in the end of March, right? So obviously we see this little rally, right? About a 10-ish% rally. And that was kind of inevitable. I think that when we see such a decline, we see such a rise in VIX was at 30, we see a lot of fear, and we start to kind of see these signs of a buyer leading into the quarterly opex on the 31st and on the 20th of March. It just makes a lot of sense that we'll see a reversion. We had a lot of peak fear down there, right? Everybody, very, very fearful. We had like 4 or 5 weeks in a row closing red on the S&P 500. And there were, notable patterns like here and here where there is climactic capitulatory behavior that will inevitably result in a reversion. Now, the extent of that reversion is obviously a little bit more aggressive than initially thought. But as I said, when we come into that window post-March OPEX and post-quarterly OPEX into the first month of April, we're seeing this peak fear. We're seeing the volatility rise as far as VIX goes, and we're seeing the um, bear porn be really, really popular online. Um, it's going to have a reversion, and it's going to most likely happen into the April 10th CPI report, the April 15th expiration, the April 17th options expiration. And lo and behold, what has happened, right? Well, we see a decline. We see the pop, the 3% day on the 31st. We see a little bit of continuation. And then we kind of see these two gap downs that are rebid. One of them off a pretty pivotal spot, which is this previous floor of accumulation that really resulted in almost no progress. And then we see a 3%, 2.5% candle last Wednesday, right off of the, ceasefire news. And in my opinion, um, this is just a weak rally, right? Look at the volume. This is obviously going to have an influx of volume because it's the last day of the quarter. But then we get this diminishing volume. We get two of the lowest days that we've seen in like a year, on the 6th and on the 9th or the 10th. And it's really weak and one-sided. We haven't swept the gap. And so I do think that this, even when we look at the weekly chart, that it's diminishing volume, right? We have a 3.6% week following a 3.4% week with 100 million less volume behind that, right? Effort and result. There's a result being seen here, but a minimal amount of effort being put in. And I think that's important to understand, and to take into consideration as far as the structure and the strength of this rally. I think that there's multiple opportunities to play within here, right? I think there's a strong possibility that we retest these Q1 2025 highs, that we take out these lows, and I do think that happens within Q2. Like I said, the early chunk of Q2, I did envision a little bit of a reversion. In the last 2/3 to half of it, I do envision a little bit of a decline, retesting the Q1 2025 highs, right? So I think there's a June options position going on here for a 613 to 620. I think there's a April to May options position going on here for a sweep of this gap, and then like a May to June position to target this gap fill. But I do think that this is relatively weak, and I do think it's the same thing on QQQ as well, as far as the 540 to 550 range. Very, very one-sided rally. That's just, we have a phantom print here as well. Not a big fan of it. We go ahead, we look at XLF. This is very accumulative, but the continuation that happens off of this attempt to kind of accumulate this in the higher low territory from the April lows to the December highs is very weak, very diminishing volume, right into an important range. I am looking at June $50 puts to target $47 on XLF. I do think that it's going to be very, very vulnerable going forward. However, um, I'm waiting for a little bit of a clearer signal at the 52 to 53 range. I think that SMH, I mean, look at how one-sided and climatic this kind of is, right? We have the preliminary signs of a distribution here, 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 and here, right? We have like a preliminary supply, a climax where we have this buying that's fizzling out, and an aggressive automatic reaction, kind of like a UT, and then a UTAD with very one-sided exhaustive gap ups with diminishing spreads into new all-time highs. This is gross, right? And a lot of people don't really realize how gross that is and how important it is that SMH looks like that, right? I do think that an XL or an ARKK summer could happen. just because we have the obvious accumulation that has been developing since May of 2022, a little bit earlier than that, like January. We have the rally from April, and then we're kind of finding a reaccumulation within here, right? Like this is kind of clean behavior, and this kind of rally that we've seen from the end of March into now has kind of been pretty healthy in comparison to a lot of indexes. And then you take a look at a name like Tesla into a big time spot. I wouldn't be upset with an ARKK summer, but I wouldn't be kind of betting my money on it. Microsoft was the largest performing or the best performing name in the Mag 7 yesterday. There was an options trade off of this discounted higher low we found last Thursday to the break of structure. I still am in MSFU looking for 400 to 440. This is such a clean chart. AMD distribution is still evident. A lot of these semiconductors look disgusting, NVIDIA being one of them, but we are reverting to potentially take out that $200 gap fill. We swept 203 off of the report in February. But there's not too much liquidity in those after-hour sessions, although it is off the earnings report, and there could still be a little bit of a supply hanging in that area, right? So, yeah, a lot of names like Meta kind of giving you this mitigation of the imbalance left from an aggressive like 20-30% move from the January highs off of the report. I still am in LLY. This is a really clean structure developing here and a really clean inside week. This is a previous all-time high that was used as resistance, broken, used as support, broken back under. We saw the cumulative intraday behavior here, and now we're kind of ideally absorbing that supply at this range to rally us to 1100. I still am long this, still long Microsoft, waiting to get into XLF, and I think that's my main focus going forward. When we have a name like Schwab in the earnings report looking absolutely hideous, it's just beautiful, man. This looks disgusting. We had the JPM report today, right? Not really an aggressive vote. BlackRock report today. A lot of these are getting the reports and they're mitigating into a range that allows for that seller to show his hand once again. But a lot of financials not only look bad on the daily chart, look bad on a longer macro perspective. Pepsi still looks good, but I'd wait for the earnings report. The 158 spot, this could give you like a flush on a flat open off the 158 spot. JD looks beautiful as like a longer term focus, potential shorter term intraday position, intra-week position there. IGV, I mean, I still think this could push the $90 spot. This is a very aggressive sweep of the 618 and taking out of the April lows. But we have to see kind of how that develops going forward. My biggest name would be Microsoft, but we have some names like CRM and Adobe that still have a healthy accumulative tape, although no real opportunity. Finally, oil is starting to settle down, in my opinion. I do think that this gives you a reversion to the 92 spot. It just makes sense, right? Like sub $80 a barrel. But I'm not thinking it's done quite yet, right? I think a lot of these names are just overextended, have aggressively rallied, and we're going to see those late buyers get trapped buying at $130 a barrel and kind of see the tape flip for the time being into April and May. But yeah, I mean, basically, disgusting tape. I think a short here is vulnerable probably post lunchtime tomorrow. That's when a lot of the opportunities develop on vixp that happened back here on the 21st. I shorted this. And then, going into late April as well, targeting 659 after a sweep of the gap, and then targeting 613 to 620. So not really much different. It's just things look gross, man. And the things that look good are healthcare and consumers. And that's a very telling thing. That the two best looking State Street sectors are two low beta, slow moving names. It's very, very telling, and you should take that into consideration. And then you look at XLF, looks fucking hideous. I think this takes out the $40 lows. You look at XLK, looks absolutely hideous. So, good luck, have fun, but I know what my exposure is going to be.